Yo, what's good everybody? Welcome back to the channel. Hope you're all doing well. Sniper Ads here. So as you guys have seen from the title, this is a part 2 of the $12,000 gain on the funded account. So if you guys haven't watched part 1 already, I highly recommend you do. I'll drop a link to that video in the description down below and on the screen for you guys here. So just wanted to outline that for you guys, and just before we get started into the video, I would highly appreciate it if you can drop a like, comment and subscribe. It really would motivate me to start dropping more content like this for you in the future. As well as that, if you can drop a follow on my socials, everything is at Sniper Ads, Instagram and Twitter mainly. And lastly, if you are interested in any of my services like my one-to-one mentorship, my signals room and my funding service, the links for that will be in the description down below. For example, our signals room here, we killed it again today. The last video part 1 was filmed yesterday. Today we're filming this one, as you can see, January 5th, and you can see the trade signal being sent out right then. The group hitting take profit 2 for 2R on the accounts. So I just want to share that with you guys. That's the intro done now, so let's get straight into the video. So just one thing I wanted to clear up before we actually get started into this video. I actually watched back my part 1 and realized I'd actually mixed up the two trades in terms of profit only, so it's not a big deal. You guys can see that for yourself over here by going to the free channel and actually looking at the buy limits that I was talking about in that first trade. As you can see here, many buy limits had to be deleted because price swerved my entry by literally that 0.4 pips, and that's why I had explained it in the last video over here where I said price literally just missed my entry for the second entry, and that's why we had such a generous stop loss. Else I would have usually put it around 6 to 7 pips. But yeah, just wanted to clear that up for you guys, just so you can get that out of the way. And again, you can look at the free Telegram to see all the proof and all the screenshots for that there. So that's that over with. Let's get straight into this trade. So as you guys can see over here on the screen, this was that trade that I took on the 30th, okay, and that's what we're going to be breaking down. Now, when it came down to GU, I'll show you guys right now on the 1 hour time frame. In fact, let me just go ahead and turn off the drawing just so you guys can see. Now, overall December for me, guys, again, like I said, it was actually very choppy. I didn't like how the market structure was forming. I mean, around here, around the 21st of December, I liked the structure, it was decent. Then we started finding more structure here, which is where I took the next trade. And then as you can see over here, it kind of gets messy again, and we're basically making double bottoms and double tops, and the market isn't exactly making up its mind in terms of where it wants to go. So because of that, that's why I was looking into the smaller time frames, because if the structure is going to be very messy on the higher time frames, and there's not many trade opportunities, I know pretty much for a fact that on the smaller time frames, which are actually carrying these higher time frames to play out, there should be some nice structure within them. So just something for you guys to look out on when it comes to time correlation, time frame correlation, and actually looking at structure. So yeah, like I was saying, I found some structure in here, decided to take those trades on the 15-minute. Usually I'm taking trades on the 1 hour, 30-minute, at the lowest 15-minute, but as you can tell, that's where I decided to execute. Maybe in the next videos I'll show you some, higher time frame trades, and you'll see the difference with them especially. So as you guys can see there, that was the first trade, and now the second trade here. So again, let's just clarify what the high time frame was telling me. So in terms of the high time frame, like I just said a second ago, price couldn't really make up its mind. Let me just zoom in for you guys so you can see it. So like I was saying, again, we're basically just in like a box right now. We were in a bit of consolidation. As you can see, this whole region over here, just a lot of consolidation. I mean, price has made a high, it's made a low, it's made an equal high, it's made an equal low. So there's no real bias for us to be going through right now. Instead, what we can do is we can drop down to the lower time frames and have a look at what price action is telling us there. So we'll go over to the 15-minute, 30 minutes not going to be that different, the 15-minute, okay, and I'm going to put on my sessions indicator so you guys can see where I was taking this trade. So again, like I told you guys from the start, I like to trade London session. That's one of it's my favorite session. If I usually don't get a trade off in London, I will look for a trade in New York, and probably about a couple hours into New York, that's it. I'll cut off my time there and I will leave the charts for the rest of the day. Don't look to take a trade after around 3 p.m. UK time. So again, when it came down to structure, guys, let's just highlight a couple of things here. Let me just turn sessions off for 1 second. So like I was saying, we had basically price rejecting off this major level of support over here, which was at 1.2 thousand, okay, and then I think it's 20,000, right? And then we also had price rejecting off the top over here, making kind of like a double top. So price didn't want to break to the upside, nor did it want to break to the downside. So now that we've clarified that, we can go ahead and look at what price was telling us as the London session approached. So again, price again came down to this level of support and actually formed that clean 3-leg extension, almost exactly what happened over here after we formed that double top. So just one thing to keep an eye out for when it comes to double tops and double bottoms, you know, price can make those double tops start to break down, make that extra confirmation, and that usually can be the third leg. So you can see 1, 2, 3, and then this next trade opportunity usually can be a very high probability trade. It's not guaranteed, nothing is guaranteed in trading, we want to stay away from those type of terms, but it's just somewhere where you will likely see price continue in that favor, just because it's established its direction through actually breaking multiple levels of structure here, then maintaining below previous highs. Then it's broken another level of structure. So now using that data and using that history, we can actually start to forecast what's going to happen next. Because what we're doing here first is we're actually identifying, we're not predicting so much. So we're identifying what's happening, and then based off that, we're actually going to forecast and then put our prediction down. So the same goes again for double bottoms. I just flip the chart upside down, double bottom, higher high, higher low, higher high, higher low, and this is where I took the previous trade. So again, I'm just literally applying that same confluence when it came to this trade. Yes, it is in the between these two levels, but again, we're using our system that we learned in the mentorship when it comes to these session timings. Again, we also had this intraday level, which acted as a clean level of support right here again, coincidentally on that third leg extension. And if we look over here again, we have kind of formed this, I wouldn't class this really as a double bottom, although it was a rejection of support. As you can see, we came a little bit away from it, around 5 pips. Then price decided to start moving to the upside. So you can see if we just trace out structure over here, price has still remained still maintain these higher lows. Okay, then price has come up to here and it has forced like a double top over here. Now a lot of traders will be looking to sell the market here just because price has made a double top, but again guys, it's not about what you see, it's about where you see it. So a double top, yes, it's been made, but where has it been made? In the middle of nowhere. So you can see in between these two levels, right, a double top's been formed. Yeah, there might be some bearish momentum right now, but maybe not overall. So understanding this and understanding where the majority of these conservative traders will go, right, we want to be staying away from that and actually trading the opposite way. Again, one of the confluence they could have had as well as this is the fact that this was a trend line. Now, using our liquidity concepts that we learned in the mentorship, I was able to use this to my advantage and actually capitalize on this move. So you can see right over here, trend line was being respected multiple times and actually would have induced a lot of sellers into the market, you know, expecting them to maybe either buy here, put their stops below, so potentially people will be buying here, putting their stops below the trend line, and then obviously getting stopped out, and other people would have been maybe looking to take a trade off this trend line on the opposite end. So they would have seen that we've broken below this trend line, right? And then they would have looked to actually take a trade back off this to go to the downside, just because price has now manipulated a lot of traders right there. So you can see how we're actually capitalizing on this by actually capturing the price right over here when it's manipulated a lot of traders, and then we're taking profits right at the next levels of liquidity. So you can see right there, this trade is very clean. We'll go into the 5-minute time frame. Let's just actually go back a little bit just so you can understand the process. So we'll put on the sessions timing right there. So again, Asian session, creating that nice channel right over here. I mean, you guys could have seen maybe this as well. Okay, and again, let's just have a look at that. You see how I'm exactly not using trend lines for my confluence. I'm just using them as a subjective area to see how a lot of other people will be looking at the market, and we're going to be doing basically the opposite of that in a way. So as you can tell right there, you can see a nice channel being formed, and based off the experiences that I've had with London session trading, I know there's a lot of manipulation involved from the banks, especially on the open. So again, this was around 7 o'clock right here. So as price developed, I could see that price was approaching my area of interest at around 7:20, 7:30, right? Okay, and overall, if we just bear in mind that this was actually an overall level of support and resistance on the intraday side of things. Yeah, you might be thinking I've missed out a lot of things over here in terms of swings and highs and lows. But again, we could all just usually sum this up with a zonal sort of marking right there. And then you'll start to see how it kind of just makes everything a little bit more compact and everything a little bit more easy on the eyes. But again, very simply, this price point over here, let's just mark this out, 1.20280, let's just call it, was a level which I had in mind. No, it wasn't no smart money concepts thing there where I actually use an order block or anything, because there wasn't much. In fact, I don't think any order blocks right there, right? This is our own system, and you can see right over here that price has actually come to the downside, almost formed, if we were to say, let's say like 100% retracement. So really looking, you know, almost like it's going to fail and potentially melt to the downside. And as you can tell right here, which is now 725, this is where I was entered into the trade, okay? And you can see there, if I even pull up the 8 cap, you can see right here, obviously it's a real account. And if we look on the 30th of December, these are the trades that were taken. So from here to there, right here, in fact. So you can see 1,000, 1,000, 1,000, 1,000, 1,000. And obviously the trade for the part one was actually these trades over here. Just wanted to clear that up with you guys. And yeah, just wanted to show you as well that I have to actually split a lot of my positions up into around four or five parts, just because it actually gives me less slippage. It gives me a better entry because I can spread that entry out over a few entries, and yeah, just overall can actually minimize the risk, because sometimes instead of going heavy on one lot, you'll see a lot of other professional traders doing this. I've seen James Storms do it. I've seen a few other traders do it, where they're just basically spreading the risk and actually minimizing the amount of slippage. Because if you're going to go ahead and throw on like a 30 lot, 20 lot, 40 lot, you will actually experience a little bit of slippage, obviously depending on your broker. But again, very simply, let's just go back to the trade. You can see right there, we actually entered the trade right here. And if we just pay attention to the price action, because this is one of my key points when it comes to trading, I look at the behavior of price. Now we can see that price has impulsively moved to the downside, okay, and it's definitely taken, you know, a little bit of liquidity to the upside and pushing down to the downside now, inducing a lot of traders to sell in the market. Now, yes, obviously we had a bit of drawdown. I had a nice strong 10 pip stop loss, and to be honest, I could have actually brought it up a little bit higher, maybe to around here, but it doesn't really matter. You can see right here, price then formed a nice rejection candle for me. Let's just turn off the sessions right here. Again, price came down very strong, had a nice rejection off my key level, a nice indecision candle, a nice reversal candlestick on the 5 minute. On the 15 minute, we actually started to go very bullish and close above my key levels. If we bring this to the side, you can see we actually tapped that area to perfection and then actually rejected off that straight away. And this is what gave me confidence, because now that I've seen price go to a 1-to-1, I can actually go ahead and start putting my stop loss to break even, just because the reaction is so strong from this level. And I know that maybe the institutions are actually in this area here as well. I'm not saying I'm trading exactly with the banks, but I know that a lot of, you know, retail traders are getting stopped out here. A lot of beginner traders are getting stopped out. People are taking sells over here right now for, you know, this inverse trend line in a way, let's just say. And also people were taking sells as this, you know, broke to the downside. I know a lot of scalpers and breakout traders would have definitely taken this trade as these lows over here got taken out. So just want to show you that. Now let's go to the 5 minute and look at the time in relation to the price. And there you have it. There's that volume pushing in, right, going right into my take profit. So you can see again, look at the time, 7:50, boom, 7:55, 5 minutes just before London Open, we go ahead and smash our target. Initially, I had my target set, I believe I had it at these highs over here. But when I saw price had, you know, moved this far bullish up in my favor, I actually, you know, it was enough profits. It's around a 1-to-3, which was like is usually like the minimum that I'm aiming for. It was actually just almost a 1-to-4. And then unfortunately, I opened I was back onto the charts at literally 1 minute past 8, which was a little too late. And as you can see right over here, 1 minute past 8 was literally right there. And that's what the screen recording showed me, you know, closing the trade around there. But again, overall, a 1-to-3 risk to reward. It almost hit pretty much a 1-to-4, as you can see right there. And yeah, just obviously, it's not the best exit. But again, just wanted to show you the concept in which we took with this trade. We saw the higher time frame wasn't giving us much of a bias, much of a direction. So we jumped down into the lower time frames to determine that structure, see where the where we could capitalize on, where the, you know, institutions or the banks will most likely manipulate traders, and then we go ahead and use that to our advantage. So yeah, just wanted to share that trade with you guys. Pretty simple, pretty straightforward. London session timing. If you're going to be taking trades at London time, you know, there will be opportunities, you know, around an hour and a half beforehand. There'll be opportunities in terms of, you know, fast price movement and liquidity grabbing and things like that around a couple hours after. So yeah, just wanted to share that with you guys. And New York session as well, very similar. And you want to be trading where the volume is usually at the highest, and that's usually at London. the New York London crossover, and then usually New York Open for about an hour or so. But then after that is when I sort of turn off the charts and I get back to what I'm doing, and then let the charts play out, and then again do my pre-market analysis around 5 a.m. And yeah, just wanted to share that with you guys. If anything, in fact, let me just share a few psychology tips with you guys. Recently I've been waking up at around like 5 a.m. and that's really been helping with my pre-market analysis. That's 3 hours before London session, and usually once you can set yourself up at 5 a.m. you will start to see the market and see the patterns in which it plays out. When it comes to you guys getting funded, or when it comes to you guys passing these challenges, or even finding consistency in the market in terms of profitability, you really have to narrow things down. You have to make sure the variables stay the same. How much sleep are you getting? What time are you waking up? How many meals are you having? How often are you at the market, and how long are you there for? If you can keep these variables all the same, right, you'll start to see different patterns in the market repeat over and over again, and you'll see which area needs more focus. Do you need more sleep? Do you need less sleep? Do you need to be on the charts more? Do you need to be on the charts less? Do you need to understand what your trade criteria is? So after you start doing this over a long period of time, you'll understand and you'll start to see the market create these patterns over and over again. And it's a case of you just picking up on that recognition in terms of the patterns and actually journaling these down. Once you can journal these trades down, once you can start to document everything that you're seeing in the past and in the present, you'll start to be able to forecast for things in the future. So just wanted to share those little tips with you guys. Again, if you have any questions, make sure you go ahead and send me a DM. I'll get back to you hopefully. And that's pretty much it. I hope you guys did find this video helpful. If you did, please drop a like, comment, and subscribe. And lastly, again, all the links for my services will be in the description down below. So that's it from me, guys. I'll catch you in the next one. Peace.